And I actually think that if played correctly, people won't talk about metals and mining anymore. I think they'll talk about, the way in which we decarbonize the world, the way in which we green the world, and commodities will be part of that.
Well, hello to viewers tuning into this virtual fireside chat that forms part of One-to-One Mining Investment EMEA's online content. I'm delighted to be talking with Julian Treger, who is the CEO of Anglo Pacific and non-executive chairman of Audley Capital Advisors. Julian, thanks very much for taking time to speak with us today.
Pleasure, Adam. Thanks for having me.
Yeah, so I wanted to start perhaps with your perspective on the big picture, and then we can get into some of the more specific topics and themes in more greater detail. But what I wanted to cover was, your view on the health of the metals and mining sector at the moment. It seems like the sector is performing very well despite the various pandemic restrictions and to travel and the various lockdowns. What's your take on the health of the sector at the moment?
Well, I think out of the pandemic, there will be some winners and losers in general. And I think the mining sector will be one of those winners because the tendency for governments coming out will be to invest in infrastructure projects globally, which green the world. And we've seen that in the US. China's always been investing in infrastructure, and we'll see similar activities, I think, in the UK and Europe. So for once, there'll be a more synchronized spend in the spaces where the mining sector has a lot to contribute. And particularly as well, there'll be more emphasis on greening. And obviously, various aspects of the sector are integral to that future story about how we reduce the carbon footprint of the world. So on the whole, obviously, it's not something that has been a good thing, but I think the mining sector will be a beneficiary of COVID.
Yeah, absolutely. So COVID triggered almost. Do you think this synchronized demand that we talk about, of China, but as well as the US repositioning, going through its own energy transition and infrastructure spend to improve their grid and move towards electrification, is this recapitalizing the mining industry? Or have we still got a long way to go in terms of the capital flows needed to come back into the sector and call this a super cycle or a boom period?
Well, first of all, I think there are different aspects. There's the investment cycle, and then there's the actual physical cycle. I think probably for this physical cycle, it's largely too late for people to bring new capacity online for this cycle. It takes so long to bring a new mine on board. I mean, one of the things I'm interested in is how greenfields reprocessing and retreatment could perhaps cover that gap in the short term. But obviously, in terms of the investment cycle, as that sort of supply-demand deficit for many commodities plays out with higher and higher prices, it will start to bring more capital back into the sector. More generalists will return. And that process is probably in its infancy.
Yeah, absolutely. So coming to your point then around the supply tightness on the physical cycle, it's going to take a long time to bring the new mines to meet this demand into production. Where do you see some of the real supply tightness in which sort of metal groups at the moment?
Well, I think, it tends to be, in my view, the sort of long lead time, large capex materials. Something like gold or silver, generally the mines are quite short life, and the capex involved in getting them up and running isn't enormous. So I think you can get those things to come online still within the next couple of years and make a difference. But obviously things like copper or nickel or cobalt, iron ore is a difficult to call. It's obviously been very strong, but we'll have to see how much general demand there is for new iron ore. I think one of the things, as I said, we're going to see much more of is recycling of scrap and reprocessing of tailings as sources of more short-term production in different commodities.
Yeah, certainly. Perhaps we can come on to the capabilities there in a bit. So as a streaming and royalties company, you excel in financing in down markets as well as up markets. Does the outlook differ in terms of how you're approaching investing or looking at striking deals within this market at the moment?
Well, basically a royalty company is a financial company. It's not a mining company. And in my view, the best way to make money in the mining sector is to buy when commodities are relatively out of favor, i.e. the consensus price forward curve is lower than you have conviction about. And so there's sort of upside, which you can see and the market cannot. And so there are still some pockets of opportunities for that, even in today's market, but a number of commodities are quite expensive. And so one does have to be very careful, although it is possible that we're in just the beginning stages of this particular cycle. And, the copper price could go to $6.50. I mean, it is possible, but obviously it's run already a lot. So one does have to pick your points very cautiously. On the other hand, that's really largely to do with financing new mines, primary royalties. Through cycle, though, we have a very interesting secondary royalty business. So the Voisey's Bay deal is a secondary royalty we bought from effectively the second owner of that royalty. Not even the first owner of that royalty. And, the ability of a company like Anglo Pacific to provide liquidity to owners of non-precious royalties, which are otherwise quite difficult to sell, I think creates a through cycle interesting investment point for us, which, will serve us well.
Yeah, certainly. Okay, well, let's come on to the energy transition then, and how profound is this transition for the metals and mining sector? We've spoken about some of the commodities that are set to do well, or perhaps have some supply tightness as the transition accelerates. But what's your view on how this is defining where metals and mining is going this decade?
Well, I think it is quite profound, and I think it will change the perception of the sector from being a sort of 19th century sort of iron ore industrial revolution type sector to being part of the future story of decarbonization. And I actually think that if played correctly, people won't talk about metals and mining anymore. I think they'll talk about, the way in which we decarbonize the world, the way in which we green the world, and commodities will be part of that. And I think the sort of mentality around our space is going to change a lot. I think it's going to be, more Silicon Valley-like, less command and control, more open, more diverse, more, focusing on B2C, not just B2B. I think you're going to find less commoditization in the commodity space. I think you might find more branding, more individualization, more interest in carbon footprints of each, company. So I think there are fundamental shifts that are going to occur in the next decade, and it's going to be quite exciting for the sector if you are part of that. But there are people who will not see it and will also, be victims of it. And you've got to be on the right side of that trade.
Yeah, absolutely. So sort of like transformation for mining as well as the energy transition itself. Do you think it's sort of a messaging thing, or like you mentioned, sort of a branding thing in terms of mining companies coming closer to the end user, coming closer to the sort of OEMs that are the EV companies that are using this raw material, and we're seeing it in terms of the value chains, but is it in terms of the broader messaging, is there something that is
Well,
changing.
I think that is part of it, but I actually think that's a subset of a quite fundamental cultural change that needs to occur.
Right.
And the openness and the messaging is part of that, but it's not all of it. I mean, it really will require a sort of slightly different approach, a sort of rethink, something, different, which we haven't seen yet. And it's going to be about, as I say, about being a subset of decarbonization space, and that's where the flows are going to come from. And so metals and mining will feel very 20th century as a concept, I think. And it's going to be about, change, facilitators, greening, decarbonizing, and within that, commodities have their place.
Yeah, absolutely. You talked previously of a carbon cost curve hypothesis on, that's going to be a benchmark, I suppose, for investors or for funds. How do you see that? How do you see companies adapting to that and embracing that challenge?
Well, I mean, there are carbon cost curves already out, and they're very interesting. And I think when we make an acquisition, we look at the cost curve and also the carbon curve. And people are going to start to pay a lot of attention to that. And, I think if I was running a junior, I would make sure that I was on the right part of that equation. Because I think if you're on the wrong part, you're going to be increasingly penalized. So I think it's going to factor highly in people's considerations. Because if you are, on the worst part of a carbon curve, it's really going to affect your sales value, the value of the commodities that are sold, etc. So I think it's going to be a major driver, and I think it will, I think cost curves are going to move from being two-dimensional to three dimensions.
Yeah, absolutely. It raises the question, of the sort of ESG criteria that are required now in discussions for raising capital or in your reporting. It's a lot for a junior company to take on. Perhaps they're already doing some of it, but not necessarily reporting on it. Perhaps they've got the data, but they're not sort of marketing impact in the way that they should. But do you think companies have responded now to some of the more stringent ESG requirements that are out there? How do you think generally the miners have performed in that respect?
Well, I think as part of this cultural change, the miners need to embrace ESG rather than resist it. I think it's been seen culturally as some sort of bother in some parts of the mining sector, and I don't think that can be. So I think, for juniors, it's very important to do the communication piece, and they need to do much more of it. But I also think it's important to really position yourself appropriately on that carbon curve, make sure that you are doing the things that move you into a better place, even if you have to, not rely upon coal-powered energy in the country, but do something yourself with solar. I think people have to help themselves a bit on that curve. And obviously, one of the major themes we've been pursuing at Anglo Pacific for years has been making sure that whatever commodity you produce, you try and get the purest spec possible, that there are less contaminants, less polluting. And so that, I think, is going to be a differentiator going forward. And again, I think juniors need to work out how they capture that premium and not be on the wrong side of that trade, which increasingly will render low spec a product unsellable.
Yeah. It's particularly interesting to hear that point in relation to the battery materials space, because you've got, the way we see some commentary is that, demands from OEMs and the battery cell manufacturers are diversifying, highly concentrated, very heavily refined chemical process to get these metals into the type of quality that needed for different battery mixes. So the purest spec is quite a good point, but that will open up a lot more opportunities for miners that are doing things, to the best of best sort of standards, best practice.
Yes, absolutely. And I think, by the way, the process piece is very interesting. The sort of treatment of commodities, how that is made greener, is an area I'm particularly fascinated by. I've seen lots and lots of innovation occurring there. I think we're going to see a lot of changes, less chemicals, more efficiency. It's quite an interesting space.
Yeah, and do you see then that we're going to get more premiums on the end product potentially for, say, really high quality nickel or a cobalt that's got meets all of the ESG?
Yeah, I mean that was certainly our bet with Voisey's Bay. In that, in the cobalt market, I think less than 10% is from OECD jurisdictions, and conflict-free cobalt should attract a premium. I mean, we've seen obviously blood-free diamonds in the past having more appeal to consumers. So I think this trend of a sort of bifurcation of pricing due to quality, maybe quality in terms of pollutants, it may be quality in terms of origin, maybe quality in terms of, sort of
processing, as you mentioned.
Yeah, exactly. All of those things I think are going to come into the equation.
Yeah, definitely. And you've got companies like, Apple looking to really examine what's under the hood of the iPhone and where everything's come from. It's
and you could imagine in years to come, somebody orders a car and they say, I want the greenest steel, or I want steel that's 80% green or 60% green, or I mean, you could actually imagine people making that choice as consumers. So I think it's going to be a different world. As I said, I think the commoditization of commodities is coming to an end.
It's interesting. Let's talk a bit more about Voisey's Bay, and there's some repositioning of the portfolio now, and Anglo Pacific's really gearing up for this change in the commodities sector for this decade or century even.
Yes. No, I think it's quite fundamental. I mean, when I joined the company, we had no battery metals. Now they are the majority of the portfolio. Cobalt's 45%. Our coking coal, origin asset was 76% when I joined the company. Now it's 12, and will be in single digits very shortly. And we are looking at ways in which we could further reduce our coal exposure in the coming quarters. So I think, if we can reduce coal at the same time as increasing batteries, I think that's a very strong market message. And we would expect, the rating to improve as that is generally appreciated and the stock becomes more accessible to ESG funds, who I think are going to constitute the larger part of the inflows to the sector.
Yeah. Is it right in thinking, though, that ESG slowed capital down coming into the sector, though, for the time being? Is it a case that, these ESG mandated funds or greener impact funds have seen how green technologies, EVs, can be part of the energy transition and greening society, but mining still carries quite an extractive sort of reputation, and so the capital is not fully flown into the sector yet, because of
that is true, and that's why the communication piece is very important. I mean, I did remember running into, a couple of years ago, enormous European institutional investors who said we will not invest in mining, but we will invest in electric vehicles.
Yeah.
And those two statements were completely unjoined up. And I think it's very important, as I said, that the sector starts to communicate the way that they are integral to this. I mean, there have been some studies which I've seen which said that unless copper demand grows, the world will not be able to meet its environmental targets, because the lack of copper production will hold back the ability to get to, the Paris Accord targets.
Yeah.
I don't think people understand how the world can't do without some commodities, and how important they are. And so that is a very important, significant thing to do. But I think as coal becomes worked out of the system, and as we move towards zero carbon steel, which I think is going to happen in the next decade, those constitute over 50% of the mining sector by value. But as those two things happen, the image of the sector will automatically become much better and more acceptable to some of those ESG funds.
Yeah, so there's a bit of time left and a sort of educational piece still to come into play. Okay, do you have any plans for expansion within the battery metals sector that you want to talk about at all? It's not just cobalt streams that you're interested in. You like gamut of metals there.
No, absolutely, Adam. I mean, we already have within the portfolio a number of very interesting projects which we own, which are going to come on stream in the coming years. We have this incredibly high quality Brazilian nickel project, which we've funded with the US government, and that should start to make a major contribution to our income in the middle part of the decade. We have a royalty on one of the biggest underdeveloped copper deposits in the world, one of the few that's owned independently, which Fortescue's taken a 20% stake in the underlying deposit. And that could be huge for us as well. We intend to make further acquisitions in the space. So, if we could find more cobalt, more vanadium, more copper, we would absolutely do so. So it's very much, we've taken this major transformational step, but it's just one big step, a giant step on the path. We need to take some smaller steps in the coming months to cement that perception in the eyes of investors.
Certainly. The Brazilian nickel project you mentioned is quite interesting in the sense that it's got the US governmental funds as part of the financing or input there. And as far as I understand, that was the first time the US has sort of allocated capital outside of its borders to a mining project in quite some time. So that just sort of indicates,
Well, that's another thematic. I mean, first of all, to have the US government through an intermediary fund investing equity is pretty interesting. And I think you'll see more of that. But the other thing I think is that whilst the public may not recognize the huge strategic value of our sector in terms of making the world a greener place and defensible place, governments do understand that. And I think what you are going to be seeing in the coming years more and more of is the breakdown of the global supply chain, the development of national strategic supply chains, of which this US investment is part. And we'll see that also happening in Europe. Eventually, the UK will catch on. But obviously, we're all catching up with China, who's way ahead of the pack on this front.
Yeah, absolutely. So we talked a little bit about the health of the industry, but how have you seen the mining companies performing in your view, whether that's the majors or the junior tier as well? It seems that since the bearish years of the last decade, companies have started to really improve and show their value, even to the equities investor now, even if they are underinvested in.
Yes, I mean, I think they've definitely shown better stewardship of assets, and obviously there were a lot of financial people who took control of companies, and the miners weren't there. I think the sector, though, hasn't been contrarian enough. Everybody still behaves as a pack. It would have been smart, and obviously I own some copper mines in part in Chile, and we've just financed 2 huge expansion plans ahead of the pack, but there should have been a bit more contrarian. It's too much feast or famine and everybody behaving in the same way. So I think we do need to have a bit more contrarian behavior, people investing in bad times and selling in good times rather than investing in good times, which is what we're about to see happen again.
Yeah. So we're getting towards it. And do you think we're going to see a lot more M&A happening as as travel picks up, due diligence, you can get out to mine sites a bit more, but also not just a backlog from pandemic stuff, but because of the resource replacement need amongst some of the larger companies?
Well, I do think so, although, I mean, they'll need to buy big things to make a difference. But absolutely, I think there will be more, and those bankers are very busy at the moment. I mean, I just had lunch with a prominent banker in London, and he said he hasn't been this busy since 2006 or something. And there are not that many bankers left to do the work. So
Yeah.
I think there's definitely a lot happening, and we see these mergers of equals all the time as indexation becomes a driver and size becomes a crucial determinant of valuation. And that trend will just continue.
Absolutely. Yeah. It's an exciting point in the market. Okay. Well, Julian, that's covered everything I wanted to touch on with you today. So I'll just say thank you very much for taking time to give some feedback whilst we're all still connecting virtually at the moment, of course.
It's a pleasure, Adam, and thank you for your thoughtful questions. I appreciated them and enjoyed the conversation, and hope your viewers will too.